Good afternoon, all. Yes, Lahari, Nitin, Niru, Abhishek, Sania. Very good afternoon to all of you all. Hope you all are doing good in the preparation. Yesterday we had our CA final results. So now it's your turn to deliver similar results. And for that, we need to put in very sincere and dedicated efforts with proper techniques and with in-depth studies. So let us take ahead our discussion on the subject of income tax laws, and within that, the topic of deduction under chapter 6A. Yes, good afternoon, Hardik, Dinesh. So, first, let me first give you all the opportunity to put across any of the questions that you all have, so that we can first take up your questions, and after answering your questions, we can go ahead with the further provisions. Yes. Anybody has any particular questions? You may put it across. If you want, I will unmute you so that you can ask your questions directly. Students, I'm waiting for your inputs. Yes, Ragini, good afternoon. Preeti, good afternoon. Much better, Preeti, 90% recovered. Actually, that day it had happened, so it was very painful and severe, but now it's okay. Thank you for asking. Good afternoon, Nitish. Yes, Hardik is having a question. In 80 CCH, 30% is allowed as deduction to both Agniveer and CG in 80 CCH2. Means both deductions are allowed to the employee only, and it is allowed of the amount paid. So there is no specific limit given in 80 CCH. So both deductions are allowed to the employee, that is the person who is the Agniveer, who is under the Agniveer scheme of the our military, and whatever amount you have deposited, which is obviously 30%. So obviously, na beta, so that is what is indirectly you can say the limit is 30%. Yes. Sir, after taking deduction chapter 6, then section 10 deduction can also be taken from GTI. Yes, Apurva, you're right. The only condition is, if you remember, when we discussed the first section, that is 80A, it had put the specific condition that for the same income, you cannot take deduction twice. So for example, you have started an industry in SEZ, which is for 10AA, and that industry is engaged in those businesses which are already having some deduction under 80IA, IB, IC, ID, etc. So for the same reason, both benefits cannot be taken. So yes, if the reason is different, like one is SEZ industry and the other is you are doing some other type of activity which is covered under 6A. So definitely for both distinct activities, you can avail both the deductions because they are going to be independent deductions and not overlapping. Yes. Who else has a question? Sir, I have a doubt in one deduction 80 say 5th point relating to excess of 1/5 salary. Okay, I'll go through that bit. I'll have to go to that page. I'll check and we'll discuss that, Sani. If there is section 35 AD business, then also, sir, we cannot take. Yes, beta, you're right. So if your business is one of the businesses which is mentioned in 35 AD, and you have set up the industry in northeastern state or some backward state for which 80 IA, IB, IC, ID is applicable. So again, for the same business, you cannot take 35 AD benefit also and chapter 6A deduction also. So you are right. Yes. Sania, can you just give the page number so that it will be easy for me to locate? .13. You said something about 1/5 of salary, right? Where is that point, beta? 1/5, which you have asked, Sania. Fifth point relating that excess of 1/5 salary. Fifth point. So fifth point would be premium. Okay, so talking about this one. Any sum deducted from the salary payable of a government employee for securing deferred annuity, and here any amount deducted by or on behalf of the government from the salary of a government employee in accordance with the conditions of his service or securing deferred annuity or making provisions for his spouse children, the excess if any over 1/5. So but it is nothing but the limit, na? Like how the limits were given as 10% of salary, 14% of salary. Here the limit is that you will be eligible for deduction up to maximum 1/5 of the salary. So if you are contributing more than 1/5 of salary, so if I have to give you in percentage, it will come to around 20%. So up to 20% of salary is the eligible amount. If you are contributing above 1/5, that is above 20%, the deduction would be limited up to 20% only. Excess, you will not get deduction. That is what they have said. You have to ignore it. Fine, beta? Great. Anybody else has a question, doubt? No? Okay. So then let us proceed with more deductions that are covered in this particular chapter, so that we first understand all the deductions and then we can take up few practical questions as well. Okay. So in the previous lecture, we had reached up to 80G. And what is G? G for God. And for God, there is donation. This is how you remember. Now, God is for all. So this deduction is for everyone. Prior to this, whatever we discuss and also the further deduction that we are going to discuss are majorly limited to individuals and in few cases also to HF. But this is one such deduction in your syllabus which is applicable to all assessees. Fine. Second, in case of an individual HUF, AOP, etc., that is if you are one of the persons listed out here, again, as we all know, there is now new regime, old regime, and these deductions are not allowable under the new regime, which is the default regime. Similarly, in case of companies, cooperative societies, again, if they are opting for the special provisions under these sections, again, these are the new regime sections or the lower tax rate sections, same like the new regime how we have. So even for companies and cooperatives, the condition, the rule is same, that if you want to get covered under the lower tax rate, which is the new regime, then you cannot take the deduction. Fine. Then we discuss this entire list. What is this list about? It is about who are eligible, no, sorry, not who, what are the donations which are eligible for deduction. For that purposes, if you remember, I had made 4 categories. First 2 categories is donation to certain funds where you will be having no limit. Second, donation to certain institutions where there would be limit. Today we are going to discuss what this limit would be for this category. Now, when you are making donation to funds where there is no limit, there are broadly 2 types of funds where the deduction is 100%. So whatever is the donation, entire amount is deduction. And in the second category where now only one donation is covered, which is Prime Minister's Drought Relief Fund. For this second category of donation, the deduction is 50%. So here 100%, here 50%. Then comes the other 2 cases where the donation is made to certain institutions or certain associations, organizations. Over there, again, there are 2 categories, 100%, 50%. 100% is applicable whenever the donation is for family planning, promotion and development done by the government, or it is for sports development. So in these two cases, for these two donations, which is falling in the limit category, that is where there is going to be some maximum limit. In this, donations made for these two purposes 100%, other than these two purposes 50%. So this is what is the category. This is what all we discussed in our previous lecture. Now we have to discuss for this second category, that is 150 both, where I have given the heading as payment or donations made to certain institutions. There is some limit. What is this limit? The limit is 10% of adjusted GTI. So the limit allowed for these two categories is you have to find out adjusted GTI. Take 10% of that adjusted GTI, that would be the limit. So for example, adjusted GTI comes to rupees 10 lakhs. 10% of 10 lakhs comes to rupees 1 lakh. So the deduction maximum limit for both these categories combined is going to be rupees 1 lakh. So for both these categories combined, you can avail the deduction subject to the condition that whatever donations you have made in both these categories, the amount of donation has to be compared with the 10% limit which we are going to study, which is 10% of adjusted GTI, which in my example is rupees 1 lakh. So this particular total donation compared with 1 lakh, whatever is lower is the eligible amount, which is over here called as the qualifying amount. So this qualifying amount, if it is falling in category 100%, if it is falling in category 2 50%, if there are few donations in 100 and few donations in 50, you will first use the limit for 100% donations because there the entire amount would be donation. And after using the limit for 100% donation, the balance limit will be used for the second category, that is where the deduction will be half. Now, how to find out adjusted total income? Because we have to take 10% of adjusted total income, which is going to be our limit. But how to find out adjusted total income? So for that, they say first reach your gross total income. This is what we know, total of all 5 heads. If there are any losses, there is a set off. You set off those losses, and then the total that you get of the 5 heads is called as GTI. Now from this GTI, you have to subtract following amount. So following amount shall be reduced from the GTI. Then what is left is your adjusted total income. What are these amounts? First is all deductions of chapter 6A except ATG, because ATG we are computing. So other than ATG, all other deductions, whatever you are eligible from ATC to ATU, you deduct those deductions. So GTI minus all other deductions under this chapter 6A except ATG. Then if you have any STCG under section 111A, or if you have any LTCG under section 112 or 112A, so for both these special incomes also you will subtract the amount. So your GTI will be reduced by these special incomes if there is any. And last, any income on which income tax is not payable. Generally, it will not be part of GTI, but by chance, there is something on which income tax is not payable, which is included in GTI, you have to reduce it because anyways, we want the taxable income. So after reducing these 4 amounts from GTI, what is left is adjusted GTI. And now take 10% of this adjusted GTI. Now, we have 4 categories of donations. For first 2 category of donations, you don't have to apply the limit, because for first 2 category of donations, whatever donations you have made to category 1, the entire amount of donation multiplied by 100%. Whatever donation you have made to category 2, entire amount of donation multiplied by 50%. This is how you calculate the deduction. But for the other 2 categories, you have to compare the total of donations made in these 2 categories with the 10% limit. So in my example, the 10% is coming to rupees 1 lakh. Anil is asking, sir, we have to calculate adjusted GTI for these special deductions separately. So special means for this ATG, what we are discussing, for this ATG category 3 and 4 donations, you have to calculate this adjusted GTI separately. Okay, after this, now find out the total amount of donation, but which donations? Only the one which are falling in the third and the fourth category. And then the total of these third and fourth category donations should be compared with your maximum limit. The lower of the two is the maximum amount on which you can get deduction. Now, for the category 3 donations, you multiply by 100%. For the category 4 donations, you multiply by 50%. This is how you will get the final answer. Sir, is this GTI same as 80 CCD 1 calculation in case? Yes, beta. You're right. Now, what are the other points? Where assessee has claimed and has been allowed any deduction under this section in respect of any amount of donation, the same will not qualify under any other provision. Obvious. So for same donation, you cannot take benefit twice. Second, donations in kind is not eligible. In other words, if let us say you have donated gold, you have donated blankets, you have donated books, such donations, even though made to any of the eligible persons or any of the eligible organizations, you will not get deduction. So for getting deduction under ATG, your donation should compulsorily be in monetary form. Hardik, in relation to casual income, there is slight confusion because the law has not clearly spelled out what is to be done. There is one honorable Supreme Court decision which says that it should also be deducted. However, if we go by the literal interpretation of the subject, then since it is not specifically asked you to reduce that particular casual income, hence we should not do it when we are solving this particular chapter or this particular question. So that is why, Preeti, since logically also in kind, you cannot find out the amount, hence it is said that it will not qualify. It means you are not going to get deduction for in kind donations. Okay, now. Next, another important point is, this is what you have to check. Whatever donations you are making, first it has to be made to the eligible categories 1, 2, 3, 4. Now, even if you are making to eligible category, you have to check this condition also, that where your donation is up to 2000 rupees, it can be made in any form, cash or banking or online or NEFT or RTGS, whatever, it is eligible. But where your payment or your donation is exceeding 2000, it should not be in cash, it should be only through banking channel. If it is through cash, that is, you have made the payment above 2000 in cash, then it will not be entitling you to this particular deduction. Next, the deduction under ATG can be claimed whether it has any nexus with business of the assessee or not. Because anyways, we are not studying PGP head. So they have just clarified that you don't have to check whether it is connected with your business. Because anyways, we are not claiming PGP deductions. We are claiming deduction from GTI. So it may not have business connection. That makes no difference. You will be eligible for deduction. So we had a circular in 2005, dated this. It says that in case where employees make donation to Prime Minister's National Relief Fund or Chief Minister's Relief Fund, Lieutenant Governor's Relief Fund through their respective employers, it is not possible for such fund to issue separate certificate to every such employee in respect of donations made to such funds, as contribution made to these funds are in the form of consolidated check. So basically what this is. So let us say we have this PM CARES fund. Now during COVID, or rather post-COVID, when things started opening up, the Honorable Prime Minister had made appeal to everyone to contribute something to the PM CARE fund. Now, one, you as individual has contributed by directly making payment in the fund, you get deduction under ATG. Second, Let us assume, or let us say I am employed in a big corporate having more than 1,000 workers or employees. Together we decide to send a huge amount to the PM Cares Fund. So what we do is internally we all employee contribute as per our capacity. Somebody is bringing 100, somebody is giving 50, somebody is giving 500, somebody is giving 10,000. As per the capacity, everyone is contributing or collecting. We are collecting it commonly, and then we give it to our employer, who then makes one single check, because making so many small payments and checks would be cumbersome for the government also. So what the employer does, it says that, okay, I will collect everybody's contribution and I will give one single check to that particular fund. Now, since you have given one single check, you will not be getting the donation receipt for everyone separately because you have given one single check. Now, here the problem would be, you have made donation, but you do not have any donation proof as such, because there is no receipt, and the common receipt which is available is also not matching with your amount, because your amount of donation would be small, like 100 rupees, but over there the total contribution or donation made is 5 crores. Now, in this particular case, how can you get the deduction? So for this, they have provided a clarification. It says that it is hereby clarified that the claim in respect of such donation as indicated above will be admissible under this section on the basis of the certificate issued by the drawing and disbursing officer, that is your employer. So what the company will do, let us say it has given one single check of 5 CR to PM Care Fund. They have received one common letter and receipt of 5 crore rupees. Now, what company will do is, individually to every one of us, the company will give a certificate type of a document certifying how much amount we contributed to this particular donation, so that we all can get the deduction. Now, another condition is the claim of assessee for deduction in respect of donations made to an institution or fund referred to in point 1 under fourth category, that is donation qualifying for 50% deduction subject to qualifying limit. So for the fourth category, what is the condition? In the return of income for any assessment year filed by him will be allowed on the basis of information relating to said donation furnished by the institution or fund to the prescribed income tax authority or person authorized by such authority, subject to verification as per the risk management strategy. Now, what is this point? This point is a procedural point, which says that the fourth category of donation, which is 50% subject to limit, will be allowed only when the person to whom you have made the donation. Now, in fourth category, you are making donation to whom? You are making only to school, colleges, or we are making a donation to any of the religious places or to any of the charitable purposes, whoever is registered. Now, when you are making donation to such entities, these entities have to upload the details in the income tax website or portal, so that once they upload the details that yes, they have received donation from so many persons, one of this is you, and they upload the details along with your name, PAN number, etc. In such a case, you will be getting the deduction on the basis of this information which is furnished by them. If they do not furnish this information as per this particular point or provision, then even though you have made donation to them, you are not eligible for deduction. In short, you have to ensure that they have uploaded your donation details on the income tax website. Okay. I hope this entire 80G is clear to everyone. Nobody having any questions, doubts with this? Yes, students? Sure. Good. Now, GG. What is GG? If you remember, I had mentioned GG is Ghar Ghuti, which means rent paid for the house in which you are staying. So, तांबेश्वरी बेटा आपको क्या नहीं समझा 10% लिमिट में? I explained the 10% limit. You have to find out adjusted GTI. How adjusted GTI is calculated? Take the figure of GTI. From that, subtract four things. One, all deductions under chapter 6 say except this section deduction, because we are yet to compute, that is all deductions except 80G. Second, deduct the short-term capital gain 111A. Third, deduct the long-term gain under 112 or 112A. And fourth, deduct any other amount which is not leviable to tax. The balance amount after deducting these four figures from GTI is your adjusted GTI multiplied by 10%. That is the limit. Hardik, I did not get your point. You are saying in 36, section 36 means PGBP. Owner does it for employee. Then disallowed as per point 4 family planning. Am I correct? But I am not getting your question. Please specify it with more details. Sabah Shakil is asking, sir, please explain total income. But a total income, I did not get from where you are using this word. The word is either GTI or it is adjusted GTI. Total income, the word used as per the normal income tax provisions, not this chapter only, means the question that you are asking, if I have to answer your question in particular, then total income means the amount of income that you get after deducting all your deductions under chapter 6A from GTI. So what is left is total income. Now, 80GG deduction is for what? It is for the rent that you are paying for the residential house in which you are staying. Now, this deduction comes with some important condition. First, the first condition is that you are not receiving HRA for which there is a separate deduction under 1013A. So let us say you are an employee, you are working with my firm. I should not be giving you HRA, because if I'm giving you HRA, then for the same rent paid, you have already got one benefit, which is HRA, for which there is also exemption. So again, I will not give you this benefit under GG. So either one, you take the exemption under HRA. This is when HRA is received. And second, you don't take that exemption, but you are covered here. So one of the two things will apply. Now, first condition is you should not be receiving HRA from your employer. Next, and who pays rent for accommodation occupied by him for residential purpose. So it should be a residential accommodation. So if you are taking a commercial property on rent, there is no deduction for that, because anyways, that particular commercial property is already getting covered in PGBP. So where you are doing your business in a commercial property and you have paid some rent for that particular property, it is already getting covered in your PGBP head. So that is why here the deduction cannot be allowed. Now, what are the conditions in detail? First, assessee should not be receiving HRA. Second, the expenditure incurred by him on rent of any furnished, unfurnished accommodation should exceed 10%. Now, what is this? I'll explain. Accommodation should be occupied by the assessee for his own residence. The assessee should fulfill other conditions, limitations as may be prescribed. And last, the assessee, his spouse, minor child, HUF, which his member should not own any accommodation at the place where he ordinarily resides and perform duties of his office or employment, etc. If assessee owns any accommodation at any place other than referred to above, such accommodation should not be in the occupation of the assessee, and its annual value is not required to be determined under this section. What it means, again, I'll explain. And then last, the assessee should be filing a declaration in the prescribed form confirming the details of rent paid. So this is a procedural requirement. Now, what is the amount of deduction that you get under this section 80GG? Try to link it with the HRA exemption that you get under section 10 bracket 13A. The exemption for HRA and the deduction over here, both are similar. So my question to you is, do you all remember what was the working given for HRA exemption calculation? I'll give you a hint. It was least of 3. Now what is those 3? That is what you can put in chat box. So HRA exemption, which you have studied in salary chapter, there is exemption of least of 3 figures. What are those 3 figures? I want you to specify. So that now when I link it with this point, you will get the synonym between the two. But if you are doing family planning expenses yourself, Hardik, you cannot get deduction under ATG. For ATG, you have to make payment of family planning expenses to the government. If you are doing yourself family planning expenses for your employee, you are not eligible for deduction directly. If assessee donates any amount in 100% deduction in fund, how will it prove? Just assessee can get the deduction by the amount, just like in case of 50% of any amount in 100% deducted in fund. How would it prove? See, Kasak, what I'm understanding your question, that when you are making payment of any amount which is eligible for donation, that is for deduction, how would you prove that the assessee has actually paid the amount and the assessee can get the exemption or deduction over here? According to me, my answer is, this is as per the question what I have understood, that when you are asking what is the proof, the proof is simply the payment that you are making to these funds. So there is one entry in your bank, another entry is in that respective funds account. So it can always be cross tallied. Okay. Perfect. So you all are correct. How much is the exemption for HRA? It is least of 3 figures. First is the actual HRA. Second is the 40% or 50% of salary. And third is rent paid minus 10% of salary. These 3 figures, actual HRA or the second figure, 40-50% of salary, or the third figure, rent paid minus 10% of salary, you have to find out these 3 figures. Lower of these 3 is your deduction, exemption under HR. Now, similar to that, you will find that there is a deduction over here, which is similar to HRA exemption. Over there, HRA, first figure was actual HRA received. Here, the figure is actual amount which is calculated at the rate of 5,000 per month. So over there, the first figure was HRA received. Here, there is no HRA received. In fact, that is one of the conditions. So the first figure is 5,000 per month. Second figure over there was 40 or 50% of salary. Here, the second figure is 25% of your adjusted gross total income. Again, how to find out this adjusted gross total income? It is after making all deductions under chapter 6A, but before making any deduction under this section. In short, you have to reduce all deductions under chapter 6A. The balance amount that is left is the amount eligible for this particular deduction, and then take 25%. So this is similar to HRA. Over there, since you are taking only salary, so you are taking 40 or 50% of salary. Here you are taking a bigger figure, which is your GTI or your gross total income. So here you have to take 25% of the adjusted total income. Adjusted total income is the same what we studied in your ATG deduction just a few minutes ago. And then the third figure, which was over there and here, same. That is what? Actual rent paid minus 10% of your total income. So if you match this, you'll find a lot of similarity between this and the HRA exemption. So that is how you can easily remember this. Hardik, in that case, I've come across that question where both ATG and GG both were given. So in that particular case, you have to solve it by making a simultaneous equation by treating one of the figures as X and the other figure as Y. So it is a tedious computation, but yes. Sabha Shakil, I think you were not present in the previous sessions. I had informed that for this chapter, the practical question that you'll get is very straightforward practical question. You would be given the list of payments and you will select the payments that are eligible for any of these deductions. You will make a total of those payments, compare it with the limit given in the section what we are studying, whichever is lower is your amount of deduction. This is the practical related to this particular chapter. Now, if you're asking me whether you get such questions in exam, so remember, you do not get a separate question generally on this chapter. You always get the adjustment of this chapter either in the chapter or the sums relating to computation of GTI or taxable amount, or second in salary head sums. In these two head sums, generally you are given the figures or the details relating to deduction. Hardik will discuss that bit. So what I wanted to bring to your notice was that here the deduction which is least of 3 is similar to the exemption under section 10 bracket 13A for HRA, which is also least of 3, and you will find a lot of synonym between the two. So here 25% of your adjusted total income, and the third figure is actual rent paid minus 10% of your adjusted total income. Now, next is GGA. Again, this is giving you deduction for donations. Now here, what are the donations that you are making? Here you are making donation for scientific research payment, that is you are making payment which would be utilized for scientific research, and you are making payment to any of the university, college, other institutions which are doing scientific research and which have been approved. Second, again you are making payment for research. Now this research is in social science, statistical research, and again you are making payment to university, college, etc., which are engaged in these researches and which are approved. Third, you are making payment for implementation of programs in rural areas for the rural development. So in other words, you are making donations to such associations or institutions whose objective is to carry out programs in rural development in rural areas. So you are making donations in short for rural development. Okay. Then you are making payment of donation to whom? To a public sector company or a local authority or to association institution which is approved by the national committee, and what they are doing is they are undertaking eligible projects. Now what are eligible projects? Eligible projects are projects which are undertaken for the upliftment of the weaker section of the society. They are eligible projects. Then you have made payment of donation for rural development fund. You have made payment of donation for national urban poverty eradication fund. So in short, if you are making payment of donation to any of these entities or funds, you are eligible for deduction under this section, which is 80 GGA. Now, the interesting point about this particular deduction is that for the same payments, what we are studying here, like scientific research, etc., you are allowed deduction under PGBP head also. So if you remember under PGP head, when we studied the PGBP head, over there we had understood that if you are making payment for scientific research, which is in the form of a contribution, that is donation, you are getting deduction under the PGP head under section 35. Now the question is, if already you are giving deduction for all this in PGBP head, why you are giving deduction again in chapter 6A? Because we have been studying right from start that for same payment, double deduction cannot be allowed. Then why you have given it over here? The reason is that there is a possibility that the person who is making payment of these donations is not having business income. So from where is he making the payment of donation? Maybe because he's having salary income. Maybe because he's having house rent income. Maybe because he has sold some of his capital assets, whatever. In such cases where the assessee is not having any PGBP income, he cannot take the deduction of this particular payments or donations under the PGP head because he's not having PGP head in the first place. So for such assessees, this section provides deduction under chapter 6A. So that is why if you read here, you'll find reference to section 35 only whenever we are talking about this scientific research, because we have already studied this in section 35 of the PGBP head. So in short, you are making payment of donation to any of these. If you are doing business, you are having PGP head, the same thing allowed as deduction over there under section 35. And if not, you are not having any business head income, then the same donations are allowed as deduction under chapter 6A. So see, what are the restrictions? No deduction under this section would be allowed in case, whereas I see, in case where the gross total income of the assessee includes PGBP income. Why this restriction? Because PGBP income assessees already claim this deduction and over there. So that is why they put a restriction that this section is limited only to non-business income assessees. Second, where deduction under this section is claimed and allowed for any assessment year, deduction shall not be allowed in respect of such payment under any provisions of this act for the same or for any other year. In short, for the same payment, you cannot take deduction twice. Again, the third condition, same like ATG. If you are making payment of donation which is up to 2000, you can pay it in any manner. But if it is exceeding 2000, it should be paid only by banking channel. Otherwise, you don't get the deduction. Next, the claim of the assessee for deduction in respect of any sum referred to under donations qualifying for deduction in return of income for any assessment year filed by him will be allowed on the basis of information relating to such sum furnished by the payee to the prescribed income tax authority or person authorized by the authority, etc., etc. So this point is again same like ATG, where it says if you have made payment of donation to any of these above authorities or institutions or college or university, you will get deduction only when these colleges, universities upload the data or the details about your donation, and this data is uploaded on the income tax portal so that it is visible on the income tax portal. You can download it and check it in the AIS, that is annual information statement. So it is simple of matching principle, same like in GST. Here also now they are bringing in matching principle that you will be eligible for this deduction if the person to whom you have made this donation has uploaded your data on the income tax website so that it can be downloaded by you, so that it can appear in your name when you open and log in into the income tax portal. Preeti is asking, sir, if by chance the deductions are not claimed under PGP, then can they be claimed under ATGGA? See, but in principle, you should be allowed to claim them. But the problem is, the section is so designed that it says that if you are having PGP income in the first place, I'm not making you eligible for this chapter 6 deduction ATGGA. So the problem will be that if you are having PGP income, then itself you are debarred from this section. So I believe that even though logically you should be allowed that if you're not claiming under PGP, you claim here. But as per the provision wordings, the law itself debars you from taking the deduction. So if you are having PGP head, take the deduction there only. If you're not having PGP head, then only come here and take the deduction. Next, Hardik is sir, so 100% deduction will be allowed. Yes, beta, here there is no limit. So here whatever you are depositing, 100% is allowed as they have not kept any limit like in case of 80G. Yes, you are right. Perfect. Now, let us go to the next two donations, 80GGB and GGC. Both are donations made to political parties. Why two sections? One is where donation is made by a company, the other is where donation is made by other than a company. So, 80GGB, this section provides deduction for any sum which is contributed in the previous year by an Indian company to a political party or an electoral trust. So, when you are making payment to political parties or to electoral trust, you are eligible for this deduction under 80GGB. What are the conditions? For the purpose of this section, the word contributes has the same meaning assigned to it under section 293 of the Companies Act, which provides that a donation or subscription or payment given by a company to a person for carrying on any activity which is likely to affect public support or for a political party shall be deemed to be contribution. Second, expenditure incurred directly indirectly by a company on advertisement in any publication, being a publication in the nature of a souvenir, brochure, tract, pamphlet, or the like, by or on behalf of a political party. So in short, either you directly give donation to political party, that is covered, or you are putting your ad in the political party's pamphlet, brochure, souvenir, etc. So in any of these cases, it will be termed as a donation to political party and you will fall in this particular section. Now, what are the further conditions? So here they have defined political party because since you are making payment of donation to political party, who will be covered in political party? Because today at local level and even in the regional and central level, you will find political parties would be ranging in hundreds. Like here recently, we had Maharashtra elections. Prior to that, we had our Lok Sabha elections. You would have found that when you went for voting, in the voting machine, you would have found names of around 30 to 40 people. In some cases, we have found names around 60 people. So how come these many people have come? In fact, in Maharashtra also and in Lok Sabha also, many of the major parties have fought the election by making a common group. So in fact, to that extent, the number of candidates are reduced. Still, you will find such a big list. Why? Because there are many people who are contesting elections and there are many people who form some group and contest under the name of some group. Whether that group is political party, answer is no. Why? Because in order to be termed as a political party, you should be registered under 29A of this act. So until and unless you are registered under this act, you cannot be treated as political party, and any payment of donation to any group which is not registered under this section or act will not be eligible for deduction here. Similarly, the other section is GGC. I had given you logics of how to remember these sections. So here now the payment of donation is, so deduction for any sum contributed in the previous year by any person to a political party or electoral trust. This deduction will however not be available to a local authority, artificial jurisdictional person wholly or partly funded by government, and meaning of political party is again same. Sir, it will be specified that it is registered. No, but you have to always assume. So when they will be giving you donation to political party, you very well assume that it is registered. Otherwise, they will not call it political party in the first place. So you cannot go for the registration checking. So that is just a condition that we are doing here. In the exams, if it is given donation to political party or contribution to political party, you have to presume they are registered because only then they would be called as a political party. Tambeshwari, there is no limit for deduction. See, simple logic, beta. Lawmakers are the people from the political party. They are the one who are sitting in the parliament and making the law. So Apurva, Tambeshwari, why will they keep any limit? See, this is how you can remember sections. I don't know whether this is the right logic or not, but at least to me it appears as the right logic because it helps me remember the provision. So you'll find that there is no limit given over here in these two sections. Otherwise, in all other sections, you'll find limits. These two sections not giving you limits. Why? Because you are giving donation to political parties. In fact, they run and function purely on the basis of your donation only. Yes, beta, you're right, Hardik. Yes, Ambeshwari, full deduction. Okay. Now, JJAA. You remember what I had said? Do gulam, do ikke. This section is relating to employment, relating to employer-employee. Now, this is a section which gives double deduction. Till now, what we were discussing that for same reason, for same payment, you cannot take deduction twice. However, this section is an exception to the rule because this section provides deduction twice. How? Firstly, what is the deduction over here? Let me give you an overview. Then we'll go to the technical details. So, you are hiring employees. Yes, Preeti, I'm explaining that only. You are hiring employees as per the conditions limits given over here, which I'll be explaining a bit later. But the point is, the salary that you are paying to these employees, whom you have hired as per the conditions limits given over here, that is, you are eligible for this deduction. The salary which you pay to these employees is eligible as deduction under this section. So 80 JJAA gives deduction of what amount? Of the amount of salary that you are paying to your employees. Who employees, what limit, everything we study. Now, why I am saying this section gives double deduction? Because for this same salary which you are paying to your employees, I have already allowed you deduction under the head PGBP. Because under PGP head, you get deduction for all your business expenses. Salary is one of the most common and major business expenses, and you always get deduction of salary under the head PGBP. After getting deduction over here, I am again allowing you deduction for the same amount of salary under 80 JJAA. That is why I said this is a very specific or special unique section. Why? Because this is giving you deduction twice for the same salary. Is this clear? Students, interact with me so that I will understand that you all are alive in the class and you all are understanding whatever I'm saying. It is not going as a bouncer or it is not coming to you as a Yorker. You are able to play it well and score well. Good. Good. So now once you have understood how it is giving double deduction, let us go to the nitty-gritties of this section. Now there is one question in the chat box which says, sir, why such exception? That is why in this case, it is allowing double deduction, and now the question is further added which says that it is like cheating to other deductions. See, I don't believe there is any cheating. Firstly, understand one thing. What law to make, what benefit to give is the sole prerogative of the parliament, the legislature, We cannot question that. Until and unless something is unconstitutional, you cannot question that particular law. You cannot say why you are doing this for this and why you are not doing this for this. Yes, wherever there is constitutional challenge, that is a different thing. Here I am giving benefit. I have all the rights to give. Like in that case, you should also ask me another question then. Why in some sections the limit is only 25,000? Why in some sections the limit is 150? Why in some sections there is no limit? You could have asked me this also, because that is also a type of cheating, na, in your words. But that is not the case. It is not cheating, or it is not being fair or extra fair to this section and unfair to others, because I have my own thought processes, or I will use a better word, I have my own policy as a government. So when I'm running this country or I'm running my state, I have some policy in my mind. I want to promote something. I had mentioned this even at the start of this chapter. Why deductions are given? Because the government wants to promote something. And now you can understand this section is for what? It is for promoting, it is for making you as a businessman hire more and more employees. So you are also getting deduction, rather you are getting double deduction. That is your added advantage, that for same payment of 1,000 rupees of salary you get under PGP also and here also. So you are benefited because twice you get the deduction for one payment. And what is the government getting, or what is it achieving? It is achieving generation of employment. And you all can understand that employment generation, if it is happening at a good rate, it is a win-win situation for everyone. First, you as public are getting more opportunities for employment. You are getting well paid. Your family is earning well. And since you are getting well paid and getting a salary or getting multiple job options because more and more employers are hiring, in that case, your standard of living increases. You now start spending on luxury comforts. This benefits the government. How? Government gets more taxes, both direct and indirect, because now you have started earning, so they get direct tax. You start spending extra, they start getting indirect tax. Similarly, the more you spend, the more it again benefits to these same businessmen, because for them the sales increases, the business increases, their profits increase. Plus, they have already got the deduction for your salary. So this is such a policy where by giving this amount as deduction, again, it is giving benefit to each and everyone in the economy and the society. That is what I believe is the reason why for this particular case, they have given special or double benefit. We can say hiring employees more beneficial than paying tax to government. ठीक है. I cannot say so, but fine. It is our perspective of looking at things and it is okay. Now, we start with the nitty-gritties of this section. The section is giving deduction of what? It is giving you deduction of additional employee cost. First, so you understand each and every technical word so that you will be able to understand the section when you read on your own also in days to come. So firstly, it is giving you deduction of additional employee cost. What is additional employee cost? So in that, firstly, what is employee cost? We know employee cost is salary. What is additional employee? Additional employee is the extra employees that you are hiring. So here this section is not giving you deduction for all employees' salary. They are very smart. They are not giving you deduction for each and every employee's salary. They are only giving you deduction for the additional employee's salary. Now, what is additional? That we'll discuss. But before that, how much is the deduction? The deduction is 30% of this salary, which you are paying to additional employees, and it is allowed over a period of 3 years. What it means that today, if you are hiring an employee who fits in the criteria of additional employee and you are paying him salary of rupees 10,000. So firstly, 10,000 you have claimed deduction under the head PGBP because it is business expense. Yes. If you are satisfying the conditions given over here, this 10,000 is allowed to you as deduction in chapter 6A under section 80 JJAA. And this deduction is allowed 30% of 10,000. That is 3,000 in current year, 3,000 in the next year, 3,000 in the next year. So 3 years combined, you get deduction of 90%. So already complete 10,000 salary deduction you have got under the head PGVP. And again, you get deduction of 9,000. How? 3,000, 3,000, 3,000. That is 30% of additional employee cost, which is allowed to you for 3 assessment years. So firstly, this is the deduction. Is this clear? Now, to whom this section is applicable? Like as we saw in the earlier sections, it was mainly to individuals, in some cases to HF. Then we saw 80G, which was for everyone. Similarly, GGB, GGC, all these deductions were for everyone. Majorly, it was covering nearly everyone. Similarly, 80JJAA says that we do not have any restriction of who you are, whether you are individual, whether you are company. We are ready to give deduction to any of you. The only condition is we will give you deduction if section 44AB applies to you. What is 44AB? If you remember, again, this we studied in the business head, where as a businessman, you are required to get your books compulsorily audited as per the income tax provisions. So when you get your books audited as per income tax provisions, the audit under income tax is called as tax audit, and the section for tax audit is 44AB. Yes, Hardik. 30th September is the last date for getting the audit done and uploading the audit report. And then 31st October is last date for filing the returns. Okay? For those people who are liable for tax audit. Now, what are the conditions? First, your business should be a new business. It should not be a makeover of some old or existing business. Like if there is any existing business being run by some other person, you take over that business and you run that business, it will not be considered as new business. Or there is a big company which gets split up into small companies. So the business of big company is now run by these small companies, which is called as demerger. Again, it is not a new business. Deduction is not allowed. In short, first condition for getting the deduction is you should have started a new business. Same point, the business is not acquired by assessee by way of transfer from any other person. So both points are dealing with same, that it should not be an old business which either you have purchased from somebody or it has come into because a big company got split up into small companies. So if the business is old, no deduction under this section. Then you should get a report of accountant. Accountant means chartered accountant, giving the particulars to be furnished before 30th September, etc., etc. So you have to furnish the audit report also, and you have to furnish the report under this section as well before the 30th of September. That is the due date for getting tax audit done. Now comes the important terms. What is additional employee cost? If you remember, I had said it is the salary which is paid to additional employees. Same thing they have mentioned over here. They have said it is a total emoluments. Total emoluments mean all components of salary which is payable to additional employees. Now, who are additional employees? That is what we get to understand. Now, who are additional employees? In case of existing business. So let us say you are running business since last 10 years. So your business is an existing business. In other words, this is not the first year of business. You have been doing business before this also. Now, we want to understand who is additional employee, because the payment made to additional employee is the additional employee cost, which is eligible for deduction. Now, who is additional employee? Additional employee means the employees which will lead to increase in the number of employees as compared to the total number of employees employed last year. So, what is additional employee? Let me give you an example. Let us say you are running a factory where you have 1,000 workers. This was your status of the last financial year. Now, as we all know, even we have studied this in costing in labor chapter, that there is something called as labor turnover, which means that this 1000 workforce will not remain constant. Some of the employees every year would be leaving the organization for some or the other reason. Now, let us say out of this 1000 employees, 100 employees left. Now, in the current year, when you are hiring the employees, obviously you will be hiring these 100 employees because they are the ones which you need already. Why? Because they were doing some operations functions in your business. So now their positions are empty. You need to replenish it. You need to do replacement. So in this current year, you have hired total 126 employees. Now, in this total 126 employees, 100 employees are the one you have hired for the previous positions. It means last year's workforce was 1000. Out of that, 100 retired or they left the job. So, if you're hiring 126 in the current year, the entire 126 is not additional employee. Only the 26 employees are additional employees, because out of 126, the 100 employees which you have employed, they are going to work in the original positions which are created because of retirement or leaving of the employees. So these 126 employees are not additional employees. Only the 26 employees beyond 100 are additional. So in simple words, what is additional employees? The number of employees which will lead to increasing your workforce. Now, interestingly, this is where you are doing a running business, which is being continued for from past few years. Now, if this is the first year of the business, if this is the first year of the business, then all employees are additional employees. Why? Because your last year workforce was 0. So all employees become additional employees. I hope this is clear. Correct. Replacement of employees not included. Correct. So for first, you will be adjusting the replacement, and then whoever are going more than the replacement is what is called as additional employee, and the salary paid to them is what is called as additional employee cost, which is eligible. But still, there are more conditions. I have just explained you what do you mean by additional employees. Correct. Now, the condition further is emoluments are paid otherwise than by way of account paid check. Now, actually, it is a negative point. It says that additional employee cost shall be nil. In other words, we will not give you deduction if this happens. So, in short, this should not happen to get deduction. So, what should happen? You should have paid the amount by account pay check or account pay draft or by electronic clearing system through a bank or any of these online mediums. This is same like PGBP section 40 capital A bracket 3 condition, where payment exceeding 10,000, they had asked that you should not pay it in cash or bearer check or even cross check. You should pay it only by way of account pay check, draft or banking medium. Same condition, same pointers have been put here, that you should be making payment through any of these mediums. And if you are making payment through any of these mediums, then only the amount is eligible as deduction in this section. Now, I'll give you the logic of this. The logic of this is, it is very easy to show dummy or fake employees. What do you mean by very easy? See, we are talking about income tax computation. You are computing your income, you are filing your return in the next financial year for the last year's income and operations. Now, in the last year, how many employees I employed, we cannot go and trace. It is traceable only through the employee related documents which are prepared and through the payment made to the employees. Now, I can very well prepare fake documents showing that I have hired 500 people. You can very well fill in the forms, the employee form that you have. and you can show fake 500 people, right? And whenever it is fake, whenever these are dummy employees, the payment cannot be through account pay check. In such cases, the payment by default you will show as cash, or maximum you'll raise a check, which is a bearer check. You yourself will go and encash that amount, but at least there will be some entry showing withdrawal of cash in your bank. So that is why they have specifically put the condition that it should not happen that somebody is taking fake deduction by showing fake or dummy employees. So we want an assurance that these are genuine employees, real employees. How that will be? By giving or putting this condition that the payment should be through account pay check. If not, we will not consider them as employees hired by you and no deduction would be allowed. Now, what are further conditions? So firstly, the employee should exceed the number of employees. And if it is your new organization, it would be the all employees that are hired. But each and every employee is not covered in this particular section. This particular section is basically designed to increase employment at lower level or for lower category. How? You'll understand. So I am saying it is only for promoting employment in the lower section of the industry. You will get it from this point. What it is saying, an employee who has been employed during the previous year and whose employment has the effect of increasing the number of employees employed by the employer as on the last day of the preceding year. So this is what is the same condition repeated. So additional employees will be the one who will increase the total number of employees as compared to the last year. But all employees are not covered here. So you will not get the deduction for each and every employee's salary. Then whose employee salary you will get deduction? Those employees which satisfy this particular criteria. Now what it says, exclusion from the definition. Which definition? Definition of additional employee cost. So who all are excluded? Those employees whose total emoluments are more than 25,000 per month. This itself shows that for higher grade of employees, this section does not give benefit. And anyway, see, mass employment happens at the lower level only, where you require the employees or what we call as workers in factories for doing your day-to-day activities. But when you are increasing the level of employment, that is, you are talking about higher grade employees, employees working in the accounts department or working in your taxation department or legal department of that particular business, they will not be covered if their payment exceeds 25,000 per month. So all employees whose payment is up to 25,000 are counted for this particular deduction. Then who else is not covered in this benefit? Where the employee for whom entire contribution is paid by the government under the employee pension scheme. So we have so many schemes: employee pension scheme, employee provident fund scheme. So there are so many schemes in which every month employee also contributes and employer also contributes. Now what is given? Which employee will not be covered? An employee for whom entire contribution is paid by the government. So where government itself is paying your contribution, such employees are not eligible for this benefit. Next, an employee who does not participate in recognized provident fund. In other words, a provident fund that you are having should be recognized. If it is unrecognized, that is URPF, you will not get this deduction. An employee employed for a period of less than 240 days during the previous year. Now, this is also an interesting condition. Why it is? Understand. If it is not given that I am employing the employee for at least 240 days in a year, then there is a very good possibility that people will show that, okay, I have, let us say, some employees during this particular year. I will ask them to retire. I will ask them to take a break of 2-3 months and again come back in the next year. Now, technically, I have not hired new employee. What I have done simply is I am rotating my employees by asking few employees to leave but not join back immediately. I am asking them to join back after some period of time, or when I am hiring them for a short period, which is called as contract-based employees. If I'm hiring employees who are short period, they are not eligible for the purpose of this section. Now, what is the period for which the employee should be hired? It should be minimum 240 days in a previous year. And in case of specific businesses which may be seasonal, for them this limit of 240 is lowered down to 150. Now, who all are covered? Employees who are working in apparel, that is clothes and all, footwear, leather products. For such industries, the employee should have worked at least for 150 days in the year. Correct? If an employee has worked for less than this period, they are not covered. Now, we have talked about emoluments. That is the emoluments that are being paid to these employees for which you are getting the deduction. Even the 25,000 limit is related to emoluments. What is emoluments? Emoluments means any sum paid or payable to the employee in lieu of his employment. That is, whatever payment you are making to the employee by whatever name call, whether you call it as salary or bonus or commission or allowances, everything is covered in emoluments. But what is not covered? This will be removed from the emoluments, or this will not be counted in emoluments while computing the deduction. So first, what is to be excluded is contribution paid or payable by the employer to the pension fund or the provident fund or any other fund for the benefit of employee. Second, lump sum payment paid or payable to an employee at the time of termination of his service. So like how you are given VRS, or at the time of superannuation or voluntary retirement. This payment will be gratuity, severance pay, leave salary, voluntary retirement benefits, etc. So, what will not be counted in emoluments while computing this particular deduction is two things: contribution to funds and payment made at the time of retirement or termination of employment. Other than this, basic, DA, salary, commission, everything else would be counted. Sir, year one, I hired 100 employee, took deduction under 80JJ, correct? Because for first year, all employees are new employees. Then in next year, I again hired 100 new employees. Then, sir, in both the years and so on coming years, I can claim deduction from this section. Yes, beta. So in first year, when you hired 100 employees, in the first year, you took the deduction of 100 employees salary, firstly in PGBP. And then for the same 100 employees, assuming above conditions are satisfied, the salary, that is the emolument that you have paid to these 100 employees, you take 30% of that in this year itself, 30% in second year, 30% in third year. Now, we come to the second year where you already had this 100 and you hired more 100. So now your workforce has become 200. Now in the second year, what will happen? Firstly, the salary paid to this entire 200 will be allowed as deduction under PGP because it is business expenditure. Fine. Then the salary paid to this 10, not 10, sorry, 100 new employees, we will take the salary of these 100 new employees and 30% of it is allowed in the second year, again 30% in third year, again 30% in fourth. So for first 100 employees, the 30% is allowed in year 1, year 2, year 3. For the second 100 employees, the 30% is allowed in year 2, year 3, year 4. Hardik, I hope you understood. And even others also understood. Now, again 80JJAA, it being very important section because it is for generating employment. Hence, this section gives you deduction under both the schemes. So see, broadly, there are only three deductions which are allowed under both the schemes. One, 80CCD2, 80CCH2. Both these are employers' contribution. One, to pension fund. Second, to your Agniveer fund. Third is 80JJA. So these are the only three deductions which are allowed in the new scheme. Other than these three remaining, all deductions are allowed only if you have opted for old scheme. Perfect, students? Yes. Sure. We'll take a 10-12 minutes break. Fine. When we come back, we go to the remaining sections and we complete this topic today. So around 10 Now, we go to the next section, a very simple one, QQB. If you remember, I had mentioned what is QQB. QQB is, as a student, we are asking question to authors. Q banai books. So basically, this section gives deduction for the royalty income that the authors of books earn from these books. Now, who are the eligible assessees? Under this section, the deduction is up to a maximum of rupees 3 lakhs. Fine. So this is the maximum amount. There is also a percentage, but for the time being, first we are studying the amount. Second, so it is up to rupees 3 lakhs. It may be the person who is getting this may be an individual resident in India, and it is in respect of income which the person has derived as an author or a co-author. That is, the deduction shall be the income derived from writing book as an author or a joint author, and it would be maximum up to rupees 3 lakhs. Now, what is the eligible amount or income that are covered in this? This income may be received either lump sum for assignment or grant of any of the rights in the copyright of the book. Such book should be work of literary, artistic, or scientific, or of royalty or copyright fees, whether receivable in lump sum or otherwise in respect of such books, and the deduction shall not be available in respect of royalty income from textbooks for schools or for guides or commentaries, brochures, diaries, magazines, newspaper, journal, pamphlets, facts, etc. In short, the book should be on one of this, and it should not be part of any school or college syllabus. That is, it should not be any textbook, and it should not also be any journal or newspaper. So, if you are an author and you are writing book on any of these three topics, and your book is taken up by any publication house, and that publication house is paying you royalty, which may be either a one-time, that is lump sum amount, or it may be given you periodically as per the sales of the book. Both are covered over here. Now again, what is note? Wherein assessee claims deduction under this section, no deduction in respect of the same income may be claimed under any other provisions. Fine. Now, manner of computing deduction. For the purpose of calculating the deduction under this section, the amount of eligible income, and what is this eligible income? Royalty or copyright fee received, otherwise than by way of lump sum, before allowing expenses attributable to such income. So we are talking about the gross royalty, not the net royalty, should not exceed 15% of the value of the book sold. So where it is in percentage, the limit is 15%. So the royalty rate that you are receiving from the publisher should be 15 maximum. So let us say the publisher is giving you royalty at the rate of 10%, then entire 10% is eligible. If he is giving you at the rate of 18%, then 3% is ineligible, only 15%, whatever amount comes, is eligible. And this 15% amount compared with 3 lakhs, whichever is lower is your final deduction. This condition is not applicable where the royalty or the copyright fees is lump sum. So anyways, when it is lump sum, it cannot be percentage. So percentage is when it is linked with the sale of the book. So more the books are sold, more you get the royalty, and there the royalty is fixed as a percentage of the sale value. Here, if it is lump sum, then it will be a fixed amount. Now, when it is lump sum, there is only one limit of 3 lakhs. Where it is percentage, you have two limits. Firstly, the percentage is 15% maximum, and the amount limit of 3 lakhs, both are applicable. What are the conditions? Furnishing of certificate in the prescribed form. For claiming the deduction, the assessee shall have to furnish a certificate in the prescribed manner, in the prescribed format, duly verified by the person responsible for making such payment. So what is this? So in other words, the publisher should be giving you a certificate in the proper format where the details relating to this book, what is the name of the book, what is the nature of the topic, and how many copies are sold, what payment is made, how it is decided, everything would be put in that particular form. Second, period for repatriation of income earned outside India. Let us say my book is being sold outside India, or my publisher is sitting outside India, and I'm going to get this particular royalty in the form of foreign currency, then I should bring such amount into India in the current convertible foreign exchange within a period of 6 months from the end of the previous year in which such income is earned. So I have to repatriate. Repatriation means bringing back the amount within a period of 6 months from the end of the previous year. Next, another deduction again for royalty. Now here it is royalty for patents. Now what is a patent royalty? So I have invented something. It may be a formula. It may be related to some vaccine, some medicine. Like I'm sure if you are following some regular international news, Russia has recently claimed that they have got a breakthrough in developing cancer vaccine, and they will be providing this vaccine free of cost firstly to their countrymen, and maybe they may provide this vaccine not free but at a discounted rate to countries which are their friendly countries, which obviously includes India. So I'm very hopeful that very soon, in next few months, we should have some breakthrough in this. And if that happens, it will be, according to me, today's era's one of the biggest breakthrough in science, because nowadays we find, okay, it is free of cost after 1 year. Okay, whatever. So we find that today it is this cancer has become so widespread that in every family virtually we get to hear that some or the other is having some or the other form of cancer, and at some particular stage. Now, what I read about this vaccination is that presently the cost that is coming is around 3 lakh ruble, which is around 2,40,000 or 2.5 lakhs of Indian rupees. So that is presently the cost which is estimated and which is provided relating to this. So if it is given at discounted, maybe we may get it as cheap as 20, 30,000, 50,000. That we'll get to know. Fine. And that is what price at which Russia gives. Then again, if government of India wants, they may even further subsidize it. So we may get it at even cheaper amount. But that would be a very big, according to me, achievement, at least of modern science. Fine. Now, so this particular royalty is dealing with patent. So what is a patent? So when I'm inventing any such thing, I may invent a small tool which may improve the process or working of any machine or a product. Or I may invent any type of chemical composition which may purify water faster, or it may convert water into some other usable material. So there can be any invention. So when any of these inventions or new ideas come up, you can get your idea, your invention patented under the Patent Act so that nobody else can copy it without your permission. Now, this patent, if you are giving to somebody, either you can sell it outright or you can give it to them on royalty, that is for using it. So if you are selling it outright, what you get is generally a capital gains income. It is not eligible for deduction. Only when you are giving it to someone for using it, where what you get is a royalty income, is what is covered over here. Now again, if it is given on royalty, the deduction is up to maximum rupees 3 lakhs, same like the previous section. The difference is in the previous section, we also had the deduction which was in percentage, which is absent over here. So here only the amount limit is provided, no percentage limit is provided. Further, this exemption shall be restricted to the royalty income, including consideration for transfer of rights in the patent or for providing information for working or use of a patent, or the rendering of any service in connection with these activities. The exemption shall not be available on any consideration for sale of the product manufactured with the use of this patented process. So this section gives deduction only in relation to income arising from giving the patent rights, not income arising from sale of the goods or products made out of the patent. So let us say I have invented this particular vaccine and I'm getting this vaccine formula patented. Now, tomorrow, if I give to any country's government, okay, I'm giving you my formula, you can use it and make the vaccine, and you give me so much amount as royalty. That is what is the my eligible income for exemption or deduction under this section. But let us say I myself use this patent and set up my own production facility and I start manufacturing the vaccine myself. So let us say I'm Bharat Biotech. So I myself, they are also doing invention. They are also coming up with new formulae. So let us say I'm Bharat Biotech and I myself use this particular patent, this particular invention and manufacture these vaccines. And now I'm earning from the sale of these vaccines. That is what is not eligible for the deduction. So it should be the income arising from the patent, not from the use of the patent in any product. Somebody has put something in chat. Usually authors and such medical practitioners are also covered in the definition of PGP, sir. If they claim in PGP, then they cannot claim in 80 QQB and RRB. Am I correct? See, beta, understand one thing. What they will claim in PGBP? Here we are talking about this particular royalty income. So you are correct. These authors, like person like me, I am already covered in PGBP. So whatever royalty I am getting from writing the books, I am covering it under my PGBP head only because all those are professional books. Now, I agree to your point that I am already covered in PGP, but what deduction I am getting in PGBP? This section is giving me deduction for the royalty income. So let us say I've earned rupees 10 lakhs of royalty in the current year, which is included in my PGBP. Now, from that 10 lakhs royalty in PGBP, I am deducting the expenses which I have incurred for writing this, or let us say I've hired some staff who helps me in writing the content, but that is a deduction of the expenses which I have incurred for earning this royalty or for getting this book done. But that is not the deduction which I'm getting in 80 QQB or RRB. 80 QQB RRB is not giving me deduction for the expenses which I made. It is giving me deduction for the income which I have earned. So this royalty, 10 lakhs which I am getting, I will first include this 10 lakhs in my PGBP as a royalty income. Against that, I will deduct all the expenses I've incurred for preparing the book, etc. That will be my PGP income from royalty. Now, the same royalty, the income which I have earned is making me eligible to claim deduction under 80 QQB up to rupees 3 lakhs. So I will be claiming the deduction up to 3 lakhs in my 80 QQB section. So there is no double deduction that I'm getting deduction in PGP also and here also, because here the deduction is not for any expense. It is for the royalty income itself. Good. Now, what is given further? In respect of any such income which is earned from sources outside India, again the same condition. So if I'm getting this royalty by giving my medicine, this patent to US, and they are giving me royalty, then again the same condition which was there above, that I should bring this particular royalty amount in convertible foreign currency within a period of 6 months from the end of the previous year, so that I will be eligible for getting this deduction. Now, coming to a very, very important section. Why important? Because this deduction is available in most of the questions that you are solving. Now, there are two similar deductions, 80 TTA, 80 TTB. Both are dealing with one common thing, that is interest. So again, here you are getting deduction for a particular income. So firstly, we include this interest in our other sources head. Now here 80 TTA covers interest only on saving bank account, whereas 80 TTB covers interest, two types of interest. One is from the saving bank account also, or interest from FD also. So this is the difference between TTA and TTB. TTA allows deduction only for one type of interest, that is saving bank interest. TTB allows me deduction for both saving bank interest as well as FD interest. Now, who gets TTA deduction, who gets TTB deduction? TTB deduction is allowed for senior citizens. And we all know under income tax senior means a person firstly who is resident and secondly who is of the age of 60 or more at any time during the previous year. So the citizens of India who are resident and who have attained the age of 60 or more are considered as senior citizens, and for them 80TTB applies. Now in 80TTB, they get deduction for two types of interest. One is FD interest, the other is saving bank account interest, and the amount up to which the deduction is allowed is rupees 50,000. So first understand this interest will be included in their other sources income. Whatever amount, let us say during the year, especially now for senior citizens, their major source of income is generally passive income. So that they get from this interest only because they've invested their money at multiple places. So whatever the interest they are getting from one saving bank account, two from FD, that interest only is eligible for deduction. So firstly, let us say 3.5 lakhs is the total interest that a senior citizen has earned, which is included in their other sources income. Out of 3.5 lakhs, 90,000 pertains to interest on saving bank account and FD. This is the breakup. Now this 90,000 is eligible for deduction under this section 80TTB, but how much? Up to rupees 50,000. And if you are not a senior citizen, then TTA applies. It applies to every assessee being an individual or HA, and it includes only interest on saving bank account deposit. It does not cover FD interest, and here the limit of deduction is 10,000. So for non-senior persons up to 10,000, for senior persons up to 50,000. Yes, Hardik. See, Hardik, this amount what you are saying about post office, that 3,500 and 7,000 is part of another section, that is section 10 bracket 15, which is an exemption. And yes, this 50,000 is over and above that post office saving exemption that you have studied in section 10 bracket 15. So this 50,000 is over and above that 3.5 or 7,000. Correct. Deduction under this section would however not be available to senior. Why? Because for senior you have another section TTB. Restriction. If aforesaid income is derived from any deposit in saving bank account held by or on behalf of a firm AOP, no deduction shall be allowed in respect of such income in computing the total income of any partner of the firm or any member of AOP. So same point, for same amount, two people cannot get deduction. In effect, deduction under this section shall be allowed only in respect of income derived in the form of interest on saving bank deposit made by individuals or HUF directly. But I think, Kasat, we just studied or we just saw that if you are having FD interest, you will get deduction under 80TTB. So a person getting FD interest gets deduction in 80TTB. 80TTB covers C, FD also. But the only point that you have to remember is 80TTB applies only if you are a senior citizen. So if you are a senior citizen, you get FD interest deduction. Yes, if you are not a senior citizen, then there is no deduction for FD interest. You're right. Perfect. And then comes the last section, that is 80U. This section we already discussed along with 80DD. So in both sections, the points are common, where you are disabled and you are not dependent on anyone. So you are earning your own livelihood by yourself, by your own efforts, you are working, you are earning. In that case, you will get deduction under 80U for treatment of your disability. Then nobody else will get the deduction. But if you are dependent on someone, or let us say some other person is dependent on you, and that person is spouse or brother, sisters or parents or your children, then the deduction is allowed under 80DD. How much is the deduction? The deduction is a flat amount. Flat means even if you spend 1,000 rupees, you get this amount only as deduction. So it is rupees 75,000 in respect of a person with disability if it is normal, and if it is a severe disability, which means more than 80%, then the amount rises to 1,25,000. Also, there was a question last time which I had clarified that when the deduction is allowed under this section or under 80DD, a fixed amount, a question comes, what if there are 2 persons or 3 persons who are disabled and dependent on me? Whether I get this amount for each person? Answer is no. Even if 1 person is dependent, or even if 4 persons are dependent, or 2 persons are dependent, my amount will remain fixed. It will be only 75 or it will be only 125. Yes, Kasek, it is not per person, it is per assessee. Yes, Hardik. So when we say you should be resident, it covers both ROR and RNOR both. Until unless we say it should be ROR, it covers both categories, ROR and RNOR both. Conditions: the assessee claiming a deduction under this section shall furnish a copy of certificate issued by the medical authority in the prescribed form and manner, along with the return of income under this section and in respect of the assessment year for which deduction is claimed. Where the condition of disability requires reassessment, fresh certificate from the medical authority shall be obtained after the expiry of the period mentioned on the original certificate. So these are simple compliance provisions. But what is AMC charges? Okay, you're talking about bank AMC charges. Yes, beta, deduction is 50,000. If you are a senior citizen and you have earned interest of rupees 50,000, your deduction or exemption is 50,000. Okay. Under 80DD can only be claimed if there is expenditure on medical treatment, whereas under 80U no such requirement. No, beta. 80DD and 80U both has the same requirement. There has to be medical expenditure. I don't know where it is written, but there has to be a medical expenditure. Until unless there is any expenditure, you don't get the deduction. See, generally what happens when you are a person with disability, there is bound to be some or the other expenditure that you incur. And anyway, since the deduction is flat, they have not asked for any proof of expenditure, because even if you have spent 100 rupees, let us say throughout the year, something you would have done relating to the disability, a nominal testing, a nominal just checkup also from doctor will be covered. Hence, they have not specifically given the condition of giving any proof of the amount. So since the amount is flat over here, you do not require proof of expenditure, you only require proof of disability. Ambeshwari, I did not get your question. You are saying medical expenditure 50,000 deduction for senior citizen. Yes, right. So, but you are talking about which section? And what you want to state over here when you are saying medical expenditure 50,000 for senior citizen? Okay. I think you're talking about 80D. Yes, correct. So that is where the senior person could not get a medical insurance policy. So section 80D says, see, first section 80D is for medical insurance premium only. However, the lawmakers realize that when a person becomes senior, generally they will not get the insurance policy itself. In such a case, the section says we will still allow you deduction. In that case, we will allow you deduction for the medical expenditure that you have incurred. So you're right. But then what is your question? Is this a question or you are just confirming? Yes, yes, yes. If a person is dependent on you and the person is disabled, so every year, this amount of deduction of 75,000 or 125 is allowed every year. And this will continue until that person is suffering from disability. So that is why you need to keep on taking the what do you say, You have to keep on taking the certificate. That is, you have to keep on testing or getting the disability certified. But it is allowed every year. It is not one-time expense. Fine. Great. Now we come to the next deduction, which is not under chapter 6A. 6A is over. The last section in 6A was 80U. But this is a very special deduction, and it is under a whole different set of conditions, which is 80, section 10AA. Now, what is this 10AA for? 10AA is for SEZ. What is SEZ? See, we are following the Chinese model of industry. We realized of late, after 1990s, after seeing the progress and development of China, I'm sure you all would be knowing that up to 1980s, India and China's GDP and everything were similar, and China was nowhere on the international map. However, they made certain policy changes. They had some very strong dictator type of government where they took strong decisions and they brought about these changes in their entire policy, in their entire government thought process. And that is where China started developing fast. Now, during 80s, there was a leftist movement across the world whereby the conservatives were in charge of many world economies, and generally these leftists or conservatives, they generally are pro-labor. So even in India, you will find that around 90s, after 80s and 90s, there was no single party who was independently forming government. They always required some other party's support. And that is where the leftist or the left parties got a lot of importance. And once they got importance, they started bringing in such laws which were pro-employee, pro-labor. I'm not saying whether it is good or bad because everything is the need of the hour. Now, at that time, it may be good, it may be required. But what happened? Anything in too much of excess is also not good. Like, even we say protein is good, but protein, if it exceeds a particular limit or the tolerance level of your body, can lead to some other malfunctionings or having rashes or swelling, etc. So even good things in excess can turn out to be sour. This is what happened with labor laws. Over a period, we passed so many labor laws because the lefties at that time became the kingmaker. They were the crucial coalition partners, and they got some important portfolios whereby they brought in such laws which made businesses very much labor dependent. That is where we also saw the rise of trade unions and all those things across India. Now, that is why suddenly our industries started taking a backstage because there were continuous lockdowns, there were continuous strikes, there were continuous labor movements, agitations, because of which we started degrading in our industrial policy and in our industrial development because everything was pro-labor. And that is where, or that is the time when China brought in this concept because they had gone through the same thing. It is not that only we had this because see, everything happens at a global level and it has impact on other countries also. So at that time, globally, it was a conservative and a leftist type of environment. So China had also gone through that and they had seen the downfall of their economy and their industries. So they brought in the concept of SEZ. Now, what is this SEZ concept? So today also India has all the labor laws. But yes, let me inform you, government has already passed a labor code. What is this labor code? This labor code is the consolidation of 50 plus different labor laws. So today we have 50 plus labor laws which are scattered. You have the Payment of Bonus Act, you have the Payment of Gratuity Act, you have the Minimum Bonus Act, you have the Provident Fund Act, you have something something relating to children, child employees, you have something related to women employees, you have the Factories Act, you have the Labor Compensation Act. There are so many acts. So what the government did is they have consolidated these 50 plus acts into one single act called as the Labor Code. It has been prepared and very soon it will be passed and implemented across India. Now, point is, China brought in this concept of SEZ whereby they said what? It may be difficult for us to cancel these labor laws because there would be agitation across the country. People would come to streets and it will be a civil right type of a situation. So instead of canceling the labor laws outright, they decided to identify some areas. Obviously, these are some backward areas where they will set up an industrial zone and that area would be given a special treatment from the remaining country. What is that special treatment? That area would be treated like a foreign territory. Now, once I say it is a foreign territory, what happens? Our Indian laws do not apply, and that is the fact. SEZ is that area, that specific area where Indian laws do not apply automatically until and unless they are specifically made applicable. Now, the biggest advantage of this is that when our Indian laws are not applicable over there, then automatically none of these labor laws applies. So the industries working over there are freed from all these problems that they were facing relating to labor. So they could focus exclusively on improving their production and their sales and their exports. This is how China or Chinese economy came up. They came out of all these labor related issues, and today, as we all know, they are the world leaders in manufacturing. Now, same thing was adopted, I'll say copied by India when they saw that, okay, we are also having the same problem, we have the same challenge, that we have passed so many labor laws that now it is choking up our industries. So they also came up with the SEZ policy. In the initial years, it was called as free trade zones. Later on, it is now called as SEZ, that is special economic zones. Now, what are these special economic zones? They are some specified areas where all the businesses which are set up are given a special status called as SEZ units. And that entire area of SEZ is a foreign territory, so much so that you and me, who are citizens of this country, we are also not allowed entry into that without having the proper entry pass. Similar to like how when you travel to another country, you require the visa for entering that country. In the same fashion, here you require a specific permission. Without that permission, you cannot enter the SEZ area. So it is as good as a foreign territory within India. Now, this particular concept was then also given various economic benefits. So not only labor law freedom, they also were given economic benefits so that they could manufacture everything cheaper and they could sell it cheaper, and thereby they could get more exports for the country. This is how India also started implementing the SEZ policy in the late 90s. And then once they found that it is getting success, they passed the SEZ Act in 2005. Now, pay attention. The point is, what is this deduction dealing with? Now, this deduction says, if you are a unit in SEZ, you are running your business in SEZ, and you are exporting from SEZ to outside India, then we will give you deduction for the profits that you earn from these exports. Now, generally SEZs are export units, but they may also make domestic sales. Now, this particular section gives deduction only for the export profits. Now, how will I find out export profits? So firstly, I'll find out the PGBP income, which is the profit from my total business. I will multiply it by the export turnover. I will divide it by the total turnover. So net profit, which is the profit of the whole business, multiplied by export turnover divided by total turnover. This will give me my proportionate export profit. This export profit I am allowed as deduction under this section 10AA for 15 years, 15 years. So the year when I start this SEZ, from that year up to next 15 years, I am eligible to take deduction of this export profit. So every year I'll find out my export profit by this formula, and out of 15, first 10 years, there is a different provision. Last 5 years, there is a different provisions. Within this first 10 years also, first 5 years, I get entire 100% export profit as deduction. So first 5 years, 100% profit as deduction. Next 5 years, that is from 6th to 10th year, I will get 50% of export profit as deduction. So for first 10 years, I will get first 5 years 100, next 5 years 50. This is how I get deduction in the first 10 years. But for the next 5 years, that is from the 11th to the 15th, for these 5 years, I get deduction again of 50% of export profits. But now there is a separate requirement. The requirement is for this last 5 years from 11th to 15th, the 50% deduction which I am getting, or the deduction which I am getting for 50% of export profit, this is allowed to me, pay attention, this is allowed to me with a condition that I will create a reserve called as Special Economic Zone Reinvestment Allowance Reserve, and I will shift or I will transfer this 50% profit to that reserve. So only if I transfer the profit to that reserve, then only I get deduction for this profit. This is the specific condition in the last 5 years. So first 10 years, no such condition. First 10 years, whatever profit you get, I'm ready to give you deduction. In first 5 years, 100% profit. In next 5 years, 50% profit without any condition of transferring it to reserve. But in the last 5 years, from 11th to 15th year, I will give you deduction for 50% of profit, but with a condition that you transfer this to investment reserve, and whatever amount is in this investment reserve, that you have to utilize for purchasing new plant and machinery for the SEZ. So that is how they are giving you deduction for 15 years. Correct? If you have understood this broad overview, let me take you to the detailings. But before that, there is a lot of things in chat box. China, food problem, Manmohan Singh, LPG, Aadhaar, China, increased productivity, Chinese government introduced market-oriented reforms, SCZ, Sehzeen, 1980, deduction is somewhat as ITC, which they can claim on inward supply on LUT basis. Okay. The assessee is an individual, so it will be deemed that it includes resident and non-resident. Yes, Pallavi. So until unless residential condition is specified in any section or deduction, you assume that it is allowed to both resident and non-resident. Okay. Now, again, what it says, in case of individuals, HF, AOP, BOI, etc., deduction would be available only if they exercise the option of shifting out of the new tax regime. So again, 10AA is also available only in the old tax regime and not in the new tax regime. Now, who all are eligible? Exemption is available to all categories of assessees who derive profits or gains from undertaking. What is this undertaking? It is a unit engaged either in manufacturing or production of goods or provision of service. Now, this is interesting. Originally, when this SEZ Act and all were passed, originally the deduction were allowed only for manufacturing. Now, over a period, they have realized that India has become a big service hub. India is becoming one of the leaders in exporting service to the world. People are keeping their back-end work in India only. Like if you would be knowing, then majority of these foreign banks and insurance companies call centers are in India. Many of the KPOs are in India. Many of your accounting backend work or taxation backend work of many countries firms come to India. So India has become a big service hub. So keeping this in mind, they also allowed export of services through SEZ as deduction under 10AA. Now, such assessee should be an entrepreneur referred to in this section of SEZ Act. That is a person who has been granted letter of approval. In short, you should have started a unit in SEZ with the permission of the SEZ Development Commissioner, and you should get a LOA, which is letter of approval. Now, essential conditions to claim exemption. The exemption shall apply to an undertaking which fulfills the following conditions. 1. It has begun manufacture, article, thing, or provide service in the SEZ between this period. So this section was introduced from AY 67, that is after the SEZ Act was passed, and those who started their business up to 2021. After 2021, whoever is starting their business in SEZ, for them this deduction is not applicable. So they have given the condition that you should have started the manufacturing or production of articles or thing or provision of service on or before 31st March 20. Then the date of manufacture or production on articles or things has been granted, extended to 31st March. So in short, now it is 31st March, up to which you should start your operations in the SEZ. Now, the assessee should furnish in the prescribed form before the date specified in 44AB, that is 1 month prior to the due date of furnishing returns, what? The report of a chartered accountant certifying that this deduction has been correctly claimed. So whoever is claiming 10AA deduction, you have to get a CS certificate. Now, no deduction under this section will be allowed to an assessee who does not furnish return of income before the due date. So it is compulsory for you to file the return before the due date if you want this deduction. The same condition was even in Chapter 6A for heading C, that is deduction for specific type of business incomes, which is not part of your syllabus. Deduction under this section will be available to a unit if the proceeds from sale of goods or provision of service is received or brought into India by the assessing convertible foreign exchange within 6 months or further period as may be allowed. So similar condition which we saw earlier also, here also, whatever exports you are making of goods and services, that has to be repatriated to India. Now, how much is the deduction? First 5 years, 100% profit. Which profit? Export profit. Next 5 years, 50% of export profit. Again, next 5 years, 50%. But here, there is a condition that you will be allowed deduction only if you are transferring this amount of profit, that is this 50%, to a special reserve called as Special Economic Zone Reinvestment Reserve. Now, only for the last 5 years, the condition is you have to create this reserve to get the deduction. Now, if you have created this reserve, for the time being you get the deduction, that is fine. But now it is another responsibility on you that the reserve is properly utilized. How and where it has to be utilized, that is what we will see. Explanation below 10AA1 clarified that the amount of deduction under 10AA shall be allowed from the total income of the assessee computed in accordance with the provisions of the Act before giving effect to the provisions of this section, and the deduction under 10AA shall not exceed total income. 5. That is logical. Now, what are the conditions to be satisfied for claiming deduction for the last 5 years? That is after the first 10 years. What it says? Subsection 2 provides that the deduction under subsection 3 clause 3 above shall be allowed only if following conditions are fulfilled. First, now you created the reserve, you took the deduction. Now what you have to do of the reserve? The amount created to this reserve is utilized. For what purpose? For purchasing plant or machinery, which is first put to use before the expiry of 3 years following the previous year in which the reserve was created. So from the end of the previous year in which you created the reserve, from that year in the next 3 years, you should utilize this reserve for purchasing plant or machinery. First. Second, until acquisition of the plant machinery, as aforesaid, for the purpose of business of the undertaking. It should, now what you should do, until its acquisition, you may utilize the amount for the purposes of the business. It means you can also do revenue expenses, but what is not allowed? First, you cannot distribute this as dividends. Second, you cannot use it for making payment outside India or for creating any asset outside India. So your reserve should not be utilized for these three things. Other than these three, you can utilize it for other business payments. Now, particulars as may be specified by the CBDT in this behalf have been furnished by the assessee in respect of plant machinery. Such particular includes details of the new plant and machinery, name and address of supplier of the new plant and machinery, date of acquisition, date on which it was first put to use, etc., etc. So since there is a specific requirement that the amount is invested in plant and machinery, now they want to keep a track that whether you have genuinely purchased a machinery or not, whether it is original, it is first hand or not. For all these things, you have to fill in and submit the details. Now, what will happen either if you wrongly utilize this reserve or if you do not utilize the reserve in that period of 3 years? Simple answer is, if you do not utilize or if you wrongly utilize, then the amount which is wrongly utilized or the amount which is not utilized will be treated as your income and it will be added to your profit of that particular year. So if the SEZ if the reserve has been utilized for any purpose other than those referred, so you have misutilized it, the amount so utilized, that is misutilized, shall be deemed to be profit in the year in which it is so misutilized. Similarly, has not been utilized before the expiry of the said period of 3 years. The amount so not utilized shall be deemed to be the profit in the year immediately following the 3-year period. So in short, whatever amount is not utilized or misutilized will be treated as your income and added to that year's total income. Now, how to find out the profits for which you get this deduction of 100% or 50%? As I said, take the PGBP income multiplied by the export turnover divided by the total turnover. So you will take the PGBP income of the SEZ unit for which we are doing all this working multiplied by the export turnover of the SEZ unit divided by the total turnover of the unit. So what you get is roughly or approximately the profits on your exports. Now, there are certain clarifications on issues relating to export of computer software. Now, anyways, we saw that export of services is also eligible. For computer software, there is some specific condition. Why? Because today, a major segment of our service export is software only. Section 10AA provides deduction to the assessee who derives profits and gains from export of articles or things or services, which includes computer software, from the year in which the unit begins to manufacture, produce such articles or things or provide services, as the case may be, subject to fulfillment of some conditions. What are these? The profits gains derived from the on-site development of computer software, including services for development of software outside India, shall be deemed to be profits and gains derived from the export of computer software. Now, what is this on-site? Many times it may so happen that you may have to go there and you may have to put your staff there in the client's place and the computer software development is done there itself. This is called as on-site. So it is not that you have developed in India and then you are sending the software outside. You have sent your employees, your computer engineers there, and they are sitting in the client's place and doing this software development. That is what is called as on-site development of software. They are saying that it will also be treated as export. So for export of software, it is not required that you develop it here and send it outside. Even if you send your employees outside who sit there in the client's place and do the computer software development, that is also export. Now, in this formula, the numerator is export turnover. How to find out this export turnover? There is some clarification. It means, what is export turnover? It means the consideration in respect of export by the undertaking, being the unit of articles, things, services received in India, brought into India by the assessee in convertible foreign exchange within 6 months. In other words, what is the amount of export is not important. Export turnover will mean the money received against this export. So I may have made export of 500 crores, but I could only bring into India 450 crores within the prescribed time of 6 months from the end of previous year. For the purpose of this calculation, numerator will have only 450 crores as my export turnover. So most important point, normally when we say turnover, by turnover we mean the sale value. Here they have clarified, we are not concerned with the sale value, we are concerned with the amount which is realized. So it is not only the sale, it is the amount of sale which you have received in India in convertible foreign exchange within the time limit. Further, they have clarified that many times what happens when we are exporting goods, along with the value of goods, we add freight, that is transport, we add some telecommunication charges, we add insurance. So many times we add these expenses. So let us say your export bill, that is the value of goods is 100 crores, and on that you have added 10 crores representing freight and all these charges. They are saying that we will consider export turnover as only the value of the original goods. So in my example, it is 100 crores. Even though my invoice is of 110 crores, the 10 crores which is added for freight, telecommunication, insurance will not be included in export turnover. Correct? So clarification on issues relating to deduction of freight, telecommunication and other charges from total turnover. Now, interestingly, from numerator you have removed this. So it is not treated as export turnover. Now the question comes, will we also be removing it from the denominator, which is the total turnover? Because if numerator we have removed or we have not included it in export turnover, then logically we should also remove it from the denominator. So what it is saying, export turnover inter alia does not include what? Freight, telecommunication charges, insurance, as we saw above, attributable to the delivery of article things outside India, incurred in foreign exchange in rendering of this service, etc. Now, CBDT has wide circular this dated this clarified that freight, telecommunication charges, insurance are to be excluded both from export turnover, that is numerator, as well as from the total turnover, which is denominator. So logically, what is not included in numerator, the same thing cannot also be included in denominator. Restriction on other tax benefits, the business loss under section 72 or loss under the head CG under 74 insofar as it relates to the business of the undertaking, that is the SEZ, shall be allowed to be carried forward. आगे क्या दिया है? During the period of deduction, depreciation is deemed to have been allowed on the assets. No deduction under ITL IB shall be allowed. So what are the first 3 points? If you are having any business loss or a capital loss, which is related to this particular unit, which unit? SEZ unit, there is no problem, you can carry forward it. So point is what? We are not restricting you to carry forward and set off the losses. Similarly, all the assets will be allowed to claim depreciation, and whatever is the depreciation as per the block method which we studied in PGBP, that will be assumed to have been allowed, and the WDV of the block would be reduced accordingly. In other words, you cannot ignore depreciation. You have to compulsorily claim depreciation. Now the third point is, you will not get deduction under these sections. So for the same reason, you cannot get deduction twice. Then again, this point is common. What is this point? If I am having two businesses, one is the eligible business, which is SEZ, and one is another business, which is not SEZ. If I am transferring goods services between these businesses, SEZ, non-SEZ, then the value that is to be taken while computing the profits of both the businesses will be the fair market value. So this is again the same point which we studied in section 80A. Same logical point is covered over here. Again, the same point, where you are claiming deduction under 10AA, again you cannot claim deduction under 35AD. So I will allow you deduction under any one of the points. Either you claim it under 10AA, that is this section, or when claim under 35AD. Amalgamation and demerger. Now this is interesting. Why this is interesting? Let us say I am a company. I have started this unit in SEZ. I claim deduction for first 12 years. Now this company gets split and becomes two companies. So today I'm company A. After demerger, I become B and C. Now B and C have come into existence in the 13th year. Now the question is, you are allowed deduction under this section for 15 years. Will these two companies B and C will now get deduction for further 15 years, or they will get deduction only for balance 3 years? That is what is the question which is answered. In the event of an undertaking being the unit which is entitled to deduction under this section, that is SEZ section of 10AA, being transferred before the expiry of the period specified, that is before 15 years, if they are transferred to another undertaking, how either in the scheme of amalgamation or demerger, no deduction shall be admissible under this section to the amalgamating or the demerged company for the previous year in which the amalgamation demerger took place. In short, in the year of amalgamation demerger, old company will not get the deduction, new will get the deduction. Fine. And second, the provisions of this section would apply to the amalgamated or resulting, that is a new company, as they would have applied to the old company had the amalgamation not taken place. Now, this language means I will not restart the deduction for the new company again for 15 years. I will allow the new company deduction only for the balance 3 years. So if the old company has taken deduction for 12 years, in the 13th year, it is getting demerged or it is getting amalgamated, then the new company will get deduction for the 13th year, the 14th year, and the 15th year. How much? 50%. That also with the condition of creating and utilizing the reserve. So this is all about SEZ 10AA. Let me take your points in the chat box. Sir, this deduction is same as ITC, which they can claim on inward supply on LUT. Okay. I think I read this. Green energy EV market. Okay. Sir, 11 to 13th, yeah, in between it purchases PMN and can claim deduction of the same under 32 as depreciation. Yes, beta. Plant and machinery का आपको 32 में depreciation मिलने ही वाला है. Great. Yes, Vipul, I remember. Total turnover will include the amount not bring into India. Yes, correct. Export turnover will, Kasak will include amount, that is a numerator will include the amount only which is brought into India, but denominator will include entire amount, whether brought into India or not brought into India. Which point 4, beta? Which point 4 you want me to re-explain? .83. Beta, SEZ transfer to non-SEZ Hardik. This is same like section 80A condition. So the point is simple. I have two businesses, SEZ and non-SEZ. Now, whatever SEZ earns, I will get deduction for that. And whatever my non-SEZ earns, I'll have to pay tax. So what I will do is, if I'm transferring anything from non-SEZ to SEZ, I will purposely take a lower price for that. So if let us say the fair market value of that item is 100, I will charge 10. Now what will happen? My non-SEZ unit, which is selling to SEZ, will incur a loss because it is selling at a very low price. But whatever loss it is incurring, I will utilize to set it off against my other businesses. So my overall income will get reduced because of this loss. At the same time, the second effect of this is, since I'm showing this lower price as cost in SEZ unit, the SEZ's profit will expand. But I have no problem because even if the SEZ profits are expanding, I will be eligible to get the deduction for those profits under 10AA. So even if I'm reporting higher profits in SEZ, that will not be a problem to me because that higher profit I will be getting deduction under 10AA. Correct, beta? So it is same like what we discussed in 80A also. Same condition was there. Great. So students, this is the end of this whole chapter. Now in next lecture, which is our fourth session allocated to this, we will deal with our practical sums on this. You may also bring your doubts or practical questions relating to this, and we can discuss that particular point, right? Okay, somebody said, can I ask you GST? I have no problem if you want to ask any GST doubt also. Nitish has put such a big doubt. What it's saying, Section 2 Voluntary Surrender of Salary Act, पेज नंबर दिस, पॉइंट नंबर दिस के अकॉर्डिंग अगर हमारी सैलरी 51 लाख होती है तो मार्जिनल रिलीफ से तो हमें एक्सेस ऑफ टैक्स से रिलीफ मिल जाता है, पर फिर भी 4% सेस एक्स्ट्रा देना ही पड़ता है। तो क्या हम 1 लाख की एक्सेस सैलरी को ऊपर जो एक्ट मेंशन है उसके सेक्शन 2 के अकॉर्डिंग गवर्नमेंट को सरेंडर कर देंगे? तो क्या हम 50 लाख तक की ही लिमिट में आकर एक्स्ट्रा सेस? यस, यू आर राइट नीतीश, I understood your doubt and what you are saying is right. In calculation of question A 80G, if amount is given for funds and organization also, when calculating adjusted GTI for QA, the fund amounts are not to be deducted. You're right, Beda. No deduction of 80G has to be done, neither of funds nor of institution. What is FCA? Beta, FCA is fellow chartered accountant. This is a type of a recognition that you are a senior chartered accountant. So when you become a CA, you are first having this degree of CA. Then when you become member of our institute and you take certificate of practice, then you start writing ACA. ACA means associate CA, which suggests that you are a newly qualified CA. And after you have completed 5 years of practice, you are eligible to use the affix FCA, which is fellow chartered accountant, which represent that you are a senior because you are in practice for more than 5 years. Perfect. Great. ठीक है Nitin, then no problem. We can discuss your doubts if that is the case in any further session whenever we meet. 80GG and 80G deduction question, can you please give? But I'll have to search for that question because that is what I just found in some reference book when I was studying for my CA finals. But anyways, it is just more like a maths-based question of X and Y. So Hardik, I'll suggest that you don't get into it right now. वो अभी फिलहाल एग्जाम्स के लिए इतना ज्यादा जरूरी नहीं है. But it is pure maths, X and Y logic. Fine. Yes, students. Anybody else has any questions? Please, you may ask me whether relating to this topic or any other question relating to your syllabus. हाँ नीतीश, मेरे को अभी ये सेम चीज नितिन ने भी बताया. एक्चुअली I was under impression कि we have one more session. So I'll request कि आप लोग एक बार इसका practical solve करिए. And whenever we meet again, I will take some half an hour, 45 minutes time in that session and I will discuss the important practical questions. Actually, I was under impression there is one more session of deduction. ठीक है बेटा? Okay. Anybody else has further questions, students? Please practice the practical sums given here. Yeah. You can ask me here also. I am very not much checking my social media accounts. So if you have, you can ask me here itself or you can text me. Acha. Pallavi, for making notes, I will say, but just refer the let us recapitulate. That is more than sufficient. So other than that, you may not be required to make any short notes. Nitish, don't worry, beta. Whenever we meet, you can ask me the doubts or you can ask me on personal level. That is not a problem. I thought I'll explain you in more depth so that you all will be able to understand the provisions and the logic. Yes, Tameshwari, Saransh also is very good. In fact, it is the best thing I have seen till now. So you all should definitely refer Saransh for your shortcut. Nitish, you can contact me. No problem. You can take my contact details from BOS and you can contact me with any questions on this. Fine, students? Yes, but it is saying coming soon because it is very making short notes and then revising the short notes for amendments is always the most difficult thing. Yes, that this is Pallavi what Hardik is also saying that Saransh is not uploaded. So beta, please allow us some time because we have to include all amendments up to November so that it is applicable for your May exams. Plus, with besides that, we have to also see what amendments are applicable to May and what are not made applicable by the ICAI BOS. So after considering all that only, we revise the Saransh, and let me inform you, it is not a so easy process because see, revising full notes is easy because you have to simply cut paste, copy paste the provisions. But when you have to revise some short notes like Saransh, we have to look into each and everything because we have made some short notes, some charts. We have connected it in a particular manner. Even one small amendment can disturb the whole chart. So that is why it requires time. So till then, beta, I'll suggest that you all refer the old Saransh. Not a very big deal. It is not that you will not understand the updated Saransh. In fact, when you are studying the old Saransh and if you have studied the regular lectures, you will definitely get to know if there are any differences. Correct? But if I'm not wrong, there is some lecture in January also of income tax. Somebody said there is no lecture, but I don't think so. There is a lecture even in January. Where is my screen? Schedule not available. Yes, you're right. Schedule may not be available, but it is there. Yes, I also have a session. That's why I said, if you all have any doubts in the practical part, I'll cover them. But Instagram and all, I don't regularly visit. So even if you share something over there, I don't know when I'll be checking it. Or do one thing, put me at least on LinkedIn. It is there. I will go and check in maybe 2 or 3 days. I don't regularly check my social media handles because I like connecting with people face to face more than on social media. So I use it only for posting my updates. So I visit there only when I have to post my updates. Yes. Thank you, Hardik. So students, great. I like the way you all are approaching the subject and you all are studying it in depth. Please understand and remember one thing. Our subjects are not difficult. They are vast. They require continuous revision so that whatever you are adding up every day, that should be retained and that you should be able to recall at the appropriate time. So please be in touch with the studies. It is just now few months left that you need to study more for this particular attempt. And if you are on schedule, if you are regularly committedly studying, I guarantee that you all will crack the first attempt itself without much hassles. कई सारे चेंज होंगे. हाँ, सो डू वन थिंग ना, दैट्स व्हाई आई एम सेइंग, आई नो कि बहुत सारे चेंज होंगे आपके सारांश में. सो एक काम करो ना, take that old saransh and you make the changes. What is the problem? In fact, when you are making the change, remember this, when you are making the change, it will help you understand it much, much better. Because when somebody else is preparing a short note and you are just referring it, it is still something alien to you. But when you yourself are preparing some short note or in some short note you are making the changes, I tell you, it will be permanent in your heads. Thank you, Abhishek. Pallavi, definitely, if there is a query session anywhere, you should post your queries. So if BOS, there is a query session, please do post your queries there. or you can connect to the respective faculty and get it cleared immediately. Fine? Great. So thank you all students. Let us catch up again. If I'm not wrong, I have 2 more sessions with you all. And then maybe whenever we will be connecting for doubt solving, we'll be connecting again. But please keep in touch with studies. Thank you. Thank you very much, everyone. Keep studying and be in touch with all your teachers. Teachers will guide you to success. They will be there with you till the end. So follow all instructions by all the faculties. Correct? Thank you. Thank you all. Keep studying. Thank you, technical team. We may close our today's session. Thank you.
Recording stopped.